Pick it up, Dustin!
Welcome back to the discount, everyone. Today is Tuesday, February 28th, 2023. You are looking at a daily chart of the SPY, Spiders, S&P 500, all the same thing. So, pretty interesting day, very slow day, but an interesting day nonetheless. And we're going to get right into it, and I'm going to cut this video a little short, um, not sacrificing any quality, of course. But it's pretty simple. So, what ended up happening today, and we'll go to the 10-minute chart, is we had this gap at 396.40, and it was a zone down to 395.35. What it did was it decided to bounce away about a few pennies short of the gap at 396.40, rally away a little bit, and then shoot back down. And in the pre-market here, you could see it's already past the gap, lower. It's not really finding much support. Who knows if that's going to be the case in the morning? But you could see it just shot right back down, and it's aiming lower. So this is all very bearish. And in the video yesterday, I had said, look, this is starting to be more and more like a bear flag. It's kind of hard to pinpoint this trend line. Let's get into it a little bit closer here. It's hard to pinpoint this trend line. You could kind of make it, to fit your thesis. I know experienced traders know what I'm talking about when I say that. But in any event, it's starting to not really care about this upsloping trend line. See if I make it touch this area right here a little bit more. It's starting to not care as much and close candles below that trend line. And it's eating time off the clock above this major downsloping trend line, or the bull bogey, as I like to call it. All right, eating time off the clock to do what? To likely make another push lower. So all that's very likely, guys. Who knows if that's going to be the case, but that's what the tape is telling me right now. So, from an intraday perspective, I'm gonna call out, and I'm gonna expect, and you guys can write this one down: 391.75 to 389. I know that's a pretty wide zone. From an intraday perspective, for a day trade, we'll get a sharper number. But this is the next zone this market is heading to test right now. Why is that? Well, it ran up, okay, broke above this major downsloping trend line, came back in, broke right through the 20-day period moving average. Doesn't care about that. It bounced a little bit off of the 50 period moving average. Doesn't care about that anymore. Now, it's tested this downsloping trend line, has tested the 200 period moving average. And what does it want? It wants a little bit lower. If it gets there, like tomorrow or Monday in a hurry formation, we can expect at least a bounce back in the other direction from an intraday day trade perspective. But maybe it's building so much time off the clock, it's going to do this for, who knows, another week, right? It could do this for another week. It could do this for another probably few days. God, I hate this brush tool. I don't know if anyone else likes it, or maybe someone can give me a tutorial on how to do it better. But anyway, so again, eating time off the clock. The more it eats time off the clock and can't get back above 404.20, and I know I wrote 404, but this thing needs to go back to 404.20. And the reason being is that is this breakdown candle high. This is where it really all went wrong. right here. Okay? If it can't get back above that action right there, start closing candles above here, okay? And resume in the upward direction, right? Then this is going to happen. And that's just clear price action. Okay. Now, let's go to the day trade. So, click over here. Perfect. So today, pretty straightforward. Tuesday, February 28th. I'm posting this at 6 a.m. 7:40 a.m. Hey, it's turnaround Tuesday. We got a little quiet overnight session. 398.85 is our early pivot. Above, and it's 400, 465, and that's the next leg up. And then, of course, as we get closer, I mean, it's only 7:40. Of course, as we get closer, I will have better numbers to present to the members. Okay. Lazy day trades. This is what we had on the board today. None of them got close. That's okay. We don't want anyone else's numbers. We want the best numbers. And when they hit those numbers, they're 8 to 9 times out of 10 going to work. So that's okay. So we move on and we look for the SPY or S&P 500 day trades. Look at this. SPY opportunities today for now, because obviously things can change. And as the day moved on, you could see, I mean, 3 p.m., it cut right through this long area opportunity. I said, boom. And you got this at 9:20 a.m., 396.40 to 395.35. That's a long zone. I understand that's a dollar zone, but that's a good zone because guess what? The risk portion of that long zone, and we don't have to get into the short because it never really got up there. So we'll go on the long zone for now. Look, you got the long zone set up at 921, and then I basically broke down what you could do. You could split the difference, you could wait a little bit lower, what have you. But that's the zone. And then where we love this zone is because closing candles below 395 means it's wrong. We know where the risk is. So let's go back. Okay? If you took first portion here, maybe a little portion in the middle, and then the bigger portion at the bottom, right? If this trade got in here like it was supposed to do and then did that thing, it didn't. But if it did do that, okay, where are you wrong? Because that's what this is about, guys. We want to know where are we wrong because we know that these trades work out a significant majority of the time. We're wrong at 395. Okay. So if you get an average of 395.92, or maybe you weighted it a little bit lower, you get an average of 395.75. That's a 1-for-1 risk reward. We're doing 75 cents gain or we're doing $1 gain for this trade. Perfect. 1-for-1 risk reward with a high win rate is exactly what you need to be successful in this business. So that obviously didn't happen, but we knew where the setup was and where it was going to be wrong at 9:30 a.m. Perfect. That's what we need. You're working remotely or you're a full-time trader. This is simple stuff. Don't need to overcomplicate anything. You don't need indicators from indicator land. Just look at price action, look at the setups, understand how much you're willing to lose on a dollar loss, how much you're willing to gain on a dollar gain, and that's pretty much it. So the lesson on this, and this also was a new trade, never got in there. It actually missed by about $1, but nonetheless, being in the channel is helpful because I call out new trades as I see the market getting open. Okay, let's keep going. So there it is. Well, what happened? So I posted this at 159. I just checked back in. We're really not this isn't about being in front of the screens till 159. This is about taking trades from 9:30 a.m. to 11 a.m. or potentially 12 p.m. and then calling it a day. But I checked back in. I said, what happened? This thing literally left us at the altar, right? Going back to the chart, left us at the altar by literally a few pennies. It would have gave it to you. Okay. Now, the lesson here is what I said was the reason they are not going to simply fill the gap at 396.40 is because they likely want something lower. They are building energy to go lower. And what happened? They went lower. They closed, and it's not how they spike it, right? And this is why I use candle close stops. I understand that it can overshoot and make traders sweat, but if you're sweating too much, it means you're overpositioned. Now, the reason because if you're a price action trader and you're simple technical analysis trader, then you understand it's how they close them, right? They closed below the gap and then look what they're doing in the after hours. This is an after hours market chart. They are chopping in the zone and it's not as important anymore because guess what? They already did the thing, right? Where that was our trade, but it just didn't hit our numbers, but that was our trade. So what happens when it comes back in? We don't want it anymore. Now, what I think is happening, how I'm reading the tape, is they're in this zone and they're gearing up now in the zone to make this next leg lower. If I can get rid of all these stupid arrows, maybe that will help. Now, all these. Hey, one of you guys message me in Twitter and show me how to get rid of these drawings a little bit faster. In any event, what I think and what I'm seeing it's doing is it closed below the gap and now it's chopping. Maybe it wants to retest the 200, maybe it wants to retest this, and then it's going to test this zone because it's been a hell of a long time, not really a hell of a long time, but it's been a long time and a little while since it has tested the 100 period moving average. Okay. All right, guys. So that's pretty much it today. Thank you for following along the Lazy Day Trader channel. We got about 130 day traders in here, so looking good. It's fun. It's great to be here. Hoping we could get some more trades under the belt this week and keep it rolling. So let me know if you have any questions, guys. As always, and looking forward to seeing you tomorrow on the charts. Take care.